Welcome back to All Things ETH. My name is Aaron, and on this channel we talk about all things Ethereum. We talk about projects, play to earn, NFTs, and price. And today, guys, I want to go over what's gonna happen in the next couple, 2, 3, 4 to 6 months. We have the merge coming up for Ethereum, and I want to give just a basic overview for those of you who are trying to understand it. Well, I'm also going to start a little bit with the price action we've seen in the last couple days as well. So if you'd like to check out more of content like this, make sure you subscribe, hit the notification bell, and like this video to show the algorithm that you like this content, guys. So, welcome back to All Things ETH. My name is Aaron, and on this channel we talk about all things Ethereum. We talk about projects, NFTs, play to earn, and price. And today, guys, I want to talk about the merge that is coming up for Ethereum. We're moving from proof of work to proof of stake, and I'm just going to do a super high level, make this as simple as possible for those of you who don't know what the merge is and what it'll do to Ethereum in particular. It will, just a quick overview, guys, it will not change the price of transactions. This is based on the merge will only change from proof of work to proof of stake. It will make the Ethereum network more sustainable, I believe, and make it possibly more decentralized. It will make it more environmentally friendly, as if that was really an issue to begin with, because the proof of work on the Ethereum network is not that energy intensive, believe it or not. And then on top of that, the things that won't be changing that you may think will be changing is speed and the price of transactions. These things will not change. In fact, we may see higher prices on transactions and even lower speeds based on congestion. However, we should see the same block times, and that shouldn't affect the time of transactions too often, unless you have a huge backup of transactions that need to go through, and that could affect timing, but price is going to affect that even more. So I would like to start with the quick overview of the price action that we got the last couple of days. Over the weekend, guys, we smashed through some resistance points, and so I'm going to jump in my screen right now and show you that. I've got my trading view up. I've got the price versus whale money flow and trend exhaustion from tradeconfident.com, guys. These are some amazing indicators, especially for crypto, and this is what I've been using to do any swing trading. I've been using these two indicators, which have been fantastic for me. Anytime the price, the trend exhaustion gets to this top red section, or the price versus whale money flow gets to the top of this section, you're going to start seeing a price decrease. And if it gets to the bottom section, and whale money flow is low and trend exhaustion is low, you're going to see a reversal in the price as well. So right now we're at 33.85, which is a fantastic price, guys. We broke through this through resistance here between 3,000 and 3,200, which was smashing, if you don't mind the pun. And then this downward sloping resistance was the big resistance I was actually looking at, that was going to hit right at about 3,300, and we smashed through that as well, which is pretty awesome. I do think we could come back to that and see prices as low as 3,200 possibly over the next couple days, just as we kind of retreat from this FOMO that's going on right now. And I do think it's a little bit of FOMO, guys. I don't think that's going to be sustainable over this week, but we'll see what happens. So overall, our price action has come down from all-time highs here at $4,800, come down to as low as 2,200, maybe even lower, just under 2,200, guys. And I've been buying up Ethereum throughout this time period, and I'm so stoked to see us in the $3,300 range. Anyway, so with that, I do think we'll probably, as I said, see a little bit of a retracement here down to this downward sloping resistance, but the downward sloping resistance comes from the initial all-time high that we had back in May, and then also lines up with September peak there, this structure high in September. And when we saw some price movement down, we bounced off of this a couple times. So I do think it is at least some sort of psychological level, guys, because we've hit it here, we hit it here, we hit it here again, and then when we passed through it here, we really tumbled down, and we really didn't even get back up to it. So now that we're over it, I'm pretty stoked. I do think we're in a new bear trend, or a new bullish trend, guys. So we were in a bear trend for a while here, back all the way from November 21st-ish. We've been in a bear trend. So the trend is your friend until the end, right? So now that we've head up, gone above structure high here, and structure high here, even meeting up with structure highs back from our early or mid to late January pricing. I do think we're in a bullish trend, guys. We hit low back here in January as well, and we're heading back up now. So I do think we could be up into the $4,000 range fairly soon. I do think we'll bounce around a little bit over the next week, possibly next 2 weeks, in the 3,300 to 3,200, really until about 3,800 is my price prediction for the next couple weeks here. Probably won't see 3,500 until next week is my guess. We could see that sooner, but right now I think we'll see 3,400. Oh, we're moving again, guys. So we'll see what happens here, but 3,400, maybe 3,500 before we take a break and head back down to 32. But that is my price prediction for now. Not financial advice, guys. I'm not a financial advisor. So if you get into Ethereum, make sure you're consulting those professionals. However, do your own research and have fun with this, guys. These are some amazing indicators from Trade Confident. I've used them quite often. A couple things for my subscribers in particular. I sold off some RON, actually. When I accumulated some RON here, it went up. It was back here that I accumulated, and this was back based on these indicators, guys. We were heading into this this range here is where I started buying some RON, or traded some wrapped ETH for RON, is right here. It did go down a little bit further, but then it started going up, and then just the other day I converted the RON that I had swapped from ETH to RON. I swapped it from RON to AXS at this point, because right as RON was hitting the top of the trend exhaustion here, AXS was actually quite low, and now we're seeing a reversal in AXS, and this is what these trend exhaustion and price versus well money flow indicators are really helping me with. And if you go over there to Trade Confident right now, you actually have a really great price on these indicators and the service that they give you over there. Lowest prices ever right now, or at least the lowest discount ever right now over there. I don't have an affiliate link. I wish I did, because, guys, these are fantastic indicators. You should check them out if you would like to. I think most traders of crypto would benefit from these. So just personal experience there, not financial advice. Do your own research. So let's get into this discussion about Ethereum and the merge in particular. So what's going on right now is we've been, since the inception of crypto, or of Ethereum in particular, by Vitalik Buterin, the CEO and creator of the protocol, we've been on a proof of work model, which is similar to that of Bitcoin. Bitcoin is mined, originally it was mined with simple computers, and now it's mined with ASICs, which are, proof concepts of specific machines, specific computing devices that only mine the algorithm of Bitcoin, right? And you can get ASICs for Ethereum, but the majority of Ethereum, at least over the last couple years, has been on graphics cards, because they can do their calculations very, very quickly. And so a lot of miners, especially home miners, will use graphics cards to mine their Ethereum. Well, soon, the Ethereum network will be changing over and merging to a proof of stake network. In fact, in December of 2020, the Beacon chain was launched, which is an Ethereum copy, if you will, where it's all based on proof of stake. So if you stake Ethereum with Coinbase, if you stake Ethereum with Lido or Rocket Pool, you're helping build the staked Ethereum network on the Beacon chain. So the Beacon chain is essentially a test network right now. It's what's going to be used as the transaction layer for Ethereum when the merge happens, and the proof of work or the current state of the Ethereum network will become the consensus layer for the transactions that go through on the Ethereum network. So the current network is going to be layer 1 essentially, and the Beacon chain, when it merges with the current Ethereum network, will become a sort of a layer 2, and that's why they're calling it ETH 2.0. But they're merging together, and this could happen as soon as June this year. I think some devs, after a recent test of a merge on the Kiln test network, which was specifically built as a test network to simulate the merge. Guys, there was some good progress made there. It did work fairly well. However, on the Kiln test for the merge, there was some issues on the Prism version of the software that the Ethereum network uses on their nodes. There was some issues with it. So, and that is or at least was the majority client, if you will, on these nodes. So I understand now that most of the node operators are moving away from Prism, or at least a good majority of them are trying to be more cautious of using Prism, as there was some issues with Prism in the Kiln testnet. So when that happens, I think the Rocket Pool in particular, I know, took a lot of their validators off of the Prism version of the client for the Ethereum network, so that there was less people using that. I know Coinbase in particular, and I believe Kraken as well, both use Prism heavily on their node validators. So they will hopefully be switching before the merge as well, but there will be some more testing that happens before a merge, because this Kiln test was not a perfect success. Now it was a success on all of the clients. In fact, I heard very good things about the merge test on the Kiln network, except for when it came to the Prism, which unfortunately was the majority client for that time period. So we hope to see some more testing on that. I know a lot of people are working, a lot of devs are working on this process, and we should see a merge sometime in Q2, maybe early Q3. But I'm shooting for July really, for a functional proof of stake network on the Ethereum, switching over from proof of work and proof of stake. So what can you do in this time period now? I personally have a bunch of Ethereum wrapped up in Coinbase that unfortunately does not give you any way to transfer those Ethereum anywhere else right now. I've got also some Ethereum wrapped in Lido, which is fantastic, because Lido will actually give you a receipt token called staked ETH, or STETH. It's STETH. And you can take that and bring that over to a protocol like Curve and get staking rewards there on top of the percentage that you're making for the proof of stake on the Ethereum network through Lido. Or you can bring it over to Ribbon Finance, with which I recommend. Now, this is financial advice again, guys. You want to look this up for yourself and do your own research. But I'm making possibly up to 38%, 39% APY using my staked ETH inside from Lido, and using it in Ribbon, which Ribbon is a options based aggregator. So it's using AI to predict options contracts that will be out of the money on a weekly basis, and anytime that those contracts do end up out of the money, we as users of the Ribbon protocol do make a percentage on top of the staked ETH that we have. And you can use it. You can use staked ETH in that. You can use just plain old wrapped ETH or regular ETH if you want. And there's different versions that you can use inside of Ribbon. In fact, let me jump over to Ribbon and just show that to you. I did cover this in another video, so go check that out as well. But they're products. So I use the staked ETH product, which is this one right here, and that's because I wanted to stake in Lido first and then have it move into Ribbon for me and get these APRs. Well, the APR has actually dropped significantly, but I think that's because we're in a bull run, and right now the option contracts are based on covered calls, which means you hold the asset, and if your price hits the call or the strike price on the way up, you could possibly lose that bit of money that you were actually using to buy the contract with, right? So you're not going to compound as much, and you're not going to win as many options bets basically on the way up when it's a cover call strategy. So I don't know if Ribbon flips to a say selling puts at this point, but I think with this trajectory of the market, and that's why I wanted to focus on the price action right now to talk about this on the back end, is that since we're heading upwards in price, we're in a bull market. It's going to be more likely for us to hit some of these price points. So right now in the current contract, Ribbon has set the option strategy to be in the money if the price of Ethereum goes above $3,500, and with the current price of nearly $3,400, we're just $100 away from that, and the option contract expires on Friday morning. Ribbon is based out of the U.S. It's decentralized, based out of the U.S. the company, and then the options are based out of the UK. So the time period in which you see the contract expire is actually at early morning for us in the U.S. So really it's the price at the end of the day, or the very early morning on Friday, or end of the day Thursday, early morning Friday is when we see the transaction happen. So as long as we see the price stay below $3,500 in the next couple of days, by Friday morning, if that is above, this contract will be exercised, if you will, and Ribbon will automatically rebuy some staked ETH in this specific product from the options protocol that they use and hopefully it's below that $3,500 range. Otherwise, we're going to see a loss on the vault's performance here. So with that, guys, I hope I've given you a decent overview of what's going to happen. Again, the merge will not affect price. It will only the price is solely based on the use of the network and how congested it is, if you will. It's like traffic, guys. If you're running down a highway and there's a ton of traffic, it's gonna take longer to get there. Well, on Ethereum, if there's a ton of traffic, you're gonna have to pay to get ahead of that traffic in order to get your transaction through. Otherwise, you'll have to wait until a time period where the network is a little bit less used in order to save some money. The same with speed. We're not going to see a speed upgrade with the merge currently. Now, in the near future, after within 6 months to a year after the merge, we will see sharding become part of the Ethereum chain, and that will extremely change the speed and the price, guys, because we'll have essentially partial bits of the network throughout, and in fact it should increase the decentralization of the Ethereum network as more people will be able to become validators. And I don't know if there will be rewards given to those smaller validators. Right now it takes 32 Ethereum for you to run a node and become a validator and get rewards from being a validator. You can be a validator without having 32 Ethereum. However, you don't get the staking rewards that you would get if you weren't a part of the network there. So if you stake 32 ETH right now, you will get rewards without having to stake through Coinbase, Lido, or Rocket Pool or others. But right now, that's pretty tough considering the price of Ethereum is at $3,400. And so 34 times what, 32 ETH, 3,400 times 32 ETH, that would take a $108,000 investment just to become a staker and a node validator in that and get that reward. So with sharding, we should see more people wanting to become a part of the Ethereum network as the hardware necessary will be much lower, and our speed and our price of the Ethereum transactions will become far less. Is what I'm hearing right now. I don't know what you know, at what factor we'll see a speed and price change, but that will all depend on the network usage at the time, and we're probably looking at least a year out for that to be part of the process. So the major thing that the merge will affect though, guys, is the price. So we're actually going to have what's been called a triple halvening. So the price of Ethereum should starts to trend up because of the merge, because as you know, the Bitcoin bull markets have been historically based on the halving of the Bitcoin mining. As to explain this as basic as possible, if you're not familiar with the halvening of the mining on the Bitcoin network, it's similar to that on the Ethereum. Every 4 years, it gets twice as hard to mine Bitcoin, and so that's why we see a run up in the price of Bitcoin every 4 years. And we just got through the halvening back in it was late 2020, I believe, or early 2021 when the halvening happened last time for Bitcoin, and that's why we saw the price really skyrocket in relation to the previous market cycle that we had. And the same thing happens with Ethereum. Well, the same thing will change. It will not become a halvening every 4 years for Ethereum. It will actually change to a much greater cutting of the supply of Ethereum when the merge happens, because very much fewer ETH will be awarded per block when we have the merge happen, and that will extremely affect the supply. In fact, the burn versus mint ratio will become deflationary at that point, as long as the usage of the network continues to grow. And as of right now, so if we go to ultrasound.money, you can actually calculate this based on the usage. So if you click this little button here, it says simulate merge. So right now we have an inflation per year of 2.4%, which is actually fairly low considering where we were before the London or the EIP 1559 improvement to the Ethereum chain happened in, I believe it was August of last year, where we saw ETH starting to get burned as a part of the transaction process. Well, with the merge, we're going to simulate that right now, and we're going to get a deflationary Ethereum of 1.8% per year, and that could go up with network usage, guys. And the network usage of Ethereum has just continued to grow. Even in this bearish part of the market, we've seen some really high transaction rates are per block. This is the issuance offset here. So over the last since the EIP 1559 change, we've seen 2 million ETH burned, or is that right? 2 million, yes, 2 million ETH burned, or I believe at the current price, guys, that's something really significant. 3,400 ETH times 2 million. That's over $6.8 billion US dollars worth of Ethereum burned since the EIP 1559 went into place. I believe August 4th was the date on that, guys, and that is incredible. So if we continue to see the usage of ETH grow as it has been, we will see even more of a simulated even more of a deflationary ETH issuance. So that will in turn send the price hopefully parabolic at that point. So I'm excited to see what happens. I've got a lot of ETH, and I know a lot of you do too. And so with that, guys, thank you so much for watching, and God bless.